So we got two fresh inflation reports in this week, and that comes a week before the Federal Reserve meets to decide what to do next on interest rates. So there's a lot of attention on those two reports. The first one was the producer price index, and that's kind of in some degree measures wholesale inflation, but that's kind of a misnomer. But that essentially fell 0.7 of a percentage point down to like 2.6%. So that was a good thing. Obviously, anytime we see inflation moving close to that Fed's 2% target, it's always welcome news. And then we had the CPI, which is probably the most closely watched gauge of inflation.
Right.
Yeah, the consumer price index. And that increased up to 2.9%. Now, you might expect people to kind of be upset about that or freak out, but markets actually rallied because there was concerns that it would tick up even higher, and then it would show that inflation is still this lingering sticky force. And yes, inflation's up on an annual basis, and yes, it's still higher than expected, but it's not high enough that markets think that the Fed is going to hold off on cutting interest rates. So this tees up the scenario for next week. It appears all but certain that the Fed will cut interest rates by most likely 1/4 of a percentage point, although some investors are betting even bigger cut. But yeah, it's going to be that would mark the first time rates were cut since Trump entered office, the first time in 2025, and comes after months of Trump and his allies, agitating for lower rates. So it's a big deal.